Thanks, everybody, for your attendance here. I'm going to talk to you about our primary asset. The information regarding the market cap and management teams, et cetera, is in the PowerPoint. And you're certainly welcome to either check out the website or stop by our booth downstairs, and we'll give you some further information. In light of the time, we're going to talk about Brewery Creek. There are very few open pit heap leach opportunities in a first world country that are shovel ready at a better than a gram per ton. We're one of them. There are even fewer of those that are in a first world jurisdiction, as I say. And I think very, very few, if any, whose CapEx to move into production is equal to or less than their market cap. So hopefully you'll see some interest here. We do have a PEA that was done on a different mine plan than one we're currently envisioning, but it still has some useful base parameters. These numbers come out of that 2014 PEA and give you an idea that the IRR on the entire plan is quite healthy. And a number of factors have changed since this, including the looney's gone down considerably, the cost of diesel has gone down, we've retired royalties, we did our resources at a half a gram cutoff. Current gold prices are certainly indicative of lowering that. A number of other factors go into that. So a conservative estimate gives you an idea of the type returns we might be looking at. The only thing I will mention to you is the shareholder list. We have right at 60% held by the group I mentioned there, myself and my wife, who is our CEO in full disclosure. And Eric Sprott are the basically equal shareholders, roughly 10% each. Pat DeCapo, Rob McEwen, CIBC Private Wealth, One Yorkville office has about 22% of our stock, and Albert Friedberg. You can't do anything in Canada. I'm not sure you'd want to anyway, but we certainly don't without the full support and benefiting the First Nations. And I kind of skipped through that, but we're very strong on that. We've worked closely hand in hand, largely through Janet's efforts to bring them along, provide them not only opportunity, but economic interest in our projects. And to that end, they have a net profits interest in the mine. We view that as a very positive factor. Our interests are aligned. That is towards profit. Here again, there's been a lot of discussion, at least on the panel this morning, about how few real exploration companies turn into revenue producers. And we think that that's one very clear difference between the, if you will, the Australian model and the previous Canadian model we've been operating under for years, where the main emphasis has been on finding a resource and selling it to somebody else. We're taking the Australian path, if you will, and that is to generate revenue and profits. This video just trying to give you a little idea of where we're located in the Yukon. Just outside of Dawson. One of the only projects in the Yukon where most of our labor force can be at home at night after the work is done. We're a 40-minute drive from Dawson. See the area that's permitted there? It's a 181 square kilometer property. About 10% of it's under a permit. You can see the various pits. This was an open pit heap leach producer from 96 to 02 with Viceroy Resources. It was put into temporary closure. At the time, they had about 100,000 ounces remaining. Over the course of the last 10 years, we've moved that up to in excess of 1.5 million, 850,000 of which is oxide. You can see the heap leach pad there. Our first phase will be reprocessing that. Then we'll move into mining unmined resources and expand the leach pad. As you see, cells 8, 9, and 10 are permitted. The ponds are still there. We'll reline those. We have to rebuild the ADR plant, a number of things like that. But we benefit from millions, tens of millions of dollars of previous work and infrastructure. Most of this I've already mentioned. Licenses are valid, good economics, and strong relationship with the First Nation. And we've basically taken the PEA that envisioned doing reprocessing of the existing heap leach, which was run of mine, so their recovery was quite low, and looking at crushing that, reprocessing it using the existing tailings or existing leach pad, and mining existing resources that are in the permit area, and then bringing some new resources, new discoveries into that permit area. Rather than doing all of that at once, which is what the PEA envisioned, we choose to take it into a three-phase approach. That's why we were able to come in with what we think will be a much lower CapEx number, something on the order of 30 to 35 million. Don't know that number for sure until the feasibility study's finished, which should be in February. In any event, there's almost 250,000 ounces on the pad, and it runs about 0.7. It's already been mined. We'll be picking that up, crushing it, replacing it, and leaching it. Here's a picture. The site looks pretty much like this currently, although the ponds are not lined. They'll have to be relined. And the buildings, obviously where the ADR plant is, do not exist currently. The foundations are there. They're usable again. We had those tested this year. The entire pad had been revegetated. Since then, since we got the approval to move forward July 1st, we've stripped all that off, and we'll be ready to go in the spring. Phase 2, after we mine the first, or actually reprocess the first 250,000 ounces, will involve 300,000 ounces that's in the PEA, listed from a number of pits here. One of the major things we're doing this year is exploration drilling between these pits, trying to connect them. And that's critical to lowering our cost. The cost that was in the PEA was around $780 an ounce, which is, I think, still a good number. But we can improve on our operating efficiencies if we can link these pits into fewer, larger pits using bigger equipment, shorter haul distance, more tons per truck. It makes a big difference. So that's one of our major concentrations now. We will have a new resource number coming out also in the February-March timeframe that will encompass approximately 140 new drill holes since the existing resource that's been published. Here again, everything in Phase 1 and Phase 2 is fully permitted and ready to go. Phase 3, these resources exist. Certainly, most of them are open-ended and will need to be upgraded further. This is where some of the exploration drilling will continue. We've had about an 80% success rate on our exploration drilling to date. That continues. There's much of the property that has yet to be explored. And I think you'll see this number here grow considerably, both in the updated resource as well as future drilling. These resources here will need additional work on permitting. That is, our existing permit will need to be amended to bring these in. And that's something we'll start working on as early as first quarter 2020. So in short, leaving some time for questions, we've done a lot of work ahead of time. We've got our camp, our man camp is in and fully ready for operations. We've done all the pre-stripping of the pad. We've checked and verified the condition of the leach pad, the plumbing, et cetera. We've secured firm bids on the ADR plant. Feasibility study will be commissioned shortly, or announced shortly rather, with an anticipated final or completion date of February 2020 on the first phase. We're already in discussions for obtaining the $30 to $35 million financing. The team has been assembled, or at least the leadership of that team, with expertise in heap leaching and operations in the north, and look forward to a great 2020. One thing I would also mention, we do have a bit of cash flow already from our pilot processing plant on a different property about 12 hours away in the Yukon, and this produces several $1 million a year for our benefit, testing high-grade ores there. And we also design and mint our own coins. And with that, I've got a minute or two for questions, if there are any.